Mr. Chairman and Mr. Ranking Member and our esteemed panel here, thank you so much for appearing. My question is for Mr. Gupta. You mentioned in your written testimony that lowering the mortgage insurance premiums at FHA has a couple of immediate consequences. Now, I support the policy of FHA lowering its charges for mortgage insurance, but I'm wondering, could you expound on how you think this pricing impacts the upcoming rulemaking process for private mortgage insurance eligibility requirements? And since you put yourself since you are in the first risk position, how will this structure the premier rules better put the private capital in first risk position while retaining that strong counterparty credit worthiness?
Absolutely. Thank you for the question, Congresswoman. So first thing, with this FHA premium reduction, FHA actually will take longer to actually get to their 2% minimum required statutory capital. Right now they're at 0.41%, and their estimate was to get there by 2015 or 16, and by some estimates out there, it could delay by 1 to 2 years. So first thing, FHA already has a lower capital regime that private mortgage insurance industry, which is currently at 4% statutory requirement, and we expect that 4% statutory requirement to go up to 7 to 8%. So in terms of private mortgage insurance industry being well positioned in the marketplace to play a bigger role, this move reverses that. This move challenges the possibility of private mortgage insurance and private capital playing a bigger role than it plays right now. As far as PMIERs are concerned, GSE eligibility guidelines, as GSE eligibility guidelines get finalized, the perception of the industry having strong capital and being a strong counterparty significantly improves across all sectors, and the possibility of either GSEs or the FHA doing more risk shares with private mortgage insurance industry actually also gets higher. I would say that is a very important element or initiative that we should focus on, because as we are thinking about FHA's pricing, doing a risk share with private mortgage insurance industry actually lets you validate that pricing because you get a market price from a private entity. So as we talk about sufficiency of price, that'll be a very good initiative.
And it won't have a chilling impact on borrowers being able to come in and qualify for the loans.
Absolutely not. Private mortgage insurance industry rates are very competitive. Before you came in, we talked about 3% down payment, 620 FICO, all the way to 50% debt to income ratios. So the guidelines are expansive, the rates are extremely competitive, so I don't see any challenges with that.
Good. Ms. Gordon, you seem like you're just chomping at the bit to say something.
Well, I just think it's, I have nothing against the possibility of FHA trying risk sharing in theory, and it has been tried before and hasn't worked particularly well. I think it's really important to recognize a few things. First of all, when you bring two parties in who have some interest in the outcome and disposition of that loan, it can be very difficult to get them all on the same page. That has been a problem with loan modifications for some people. One of the things that the new FHFA rules will do is, have private mortgage insurers essentially delegate their responsibility to the GSE servicers so that they can handle things more efficiently and effectively for borrowers. And so anytime you do any kind of risk sharing, it's important to recognize the different incentives of the parties and the different missions of the parties, and make sure that you're structuring any program to account for those different incentives and different structures properly. Actually, for most of these loans, if you have any down payment at all, the borrower is in the first loss position, then the mortgage insurer. I'm just adding a word of caution in terms of these different structures. What I do want to say is that right now, if Fannie and Freddie were to change their policies with respect to the very steep risk-based pricing in which they've been engaged, I think you would see a lot more borrowers able to go to Fannie and Freddie, and then PMI would be able to insure those loans.
You agree?
Yes.
Thank you.
We do agree.
Thank you for your indulgence, Mr. Chairman.
Thank you. Thank you, Ms. Moore.